Yeah, I'm losing my edge.
It is Friday. We're talking about technology stocks like we have all week, but we are loosening up a little bit here. We're going to take a step back like we like to on Friday, chill out a little bit and talk about just the democratization of these technology stocks. And that's a buzzword that a lot of companies like to use and guys like you and me like to make fun of, but it fits for today because this technology product, the big difference between other tech products and the reason why we created this thing was to give each stock its own uh, chance to move the index. These other tech products that have 50 names, 75 names, 100 names, sometimes more than the small technology 60. Some of those stocks don't have a chance. They're almost in there just for marketing purposes. It's like, oh yeah, Moderna, the biotech stock, it's in our index, but it's got a 0.2% weighting, so it's not going to matter at all ever, no matter how much it moves. We took a different approach to that. We want Moderna in there. We want it to have a similar weighting to Apple and Microsoft, and thus democratization, right?
Yeah, it's almost a facade to say you have Moderna in there where it has actually no no representation at all. And so many people, I mean, if you look at S&P 500, it doesn't even have 500 stocks. It has more than that. And if you scroll through all of them, you probably wouldn't recognize too many. And those stocks, unfortunately, they could be the next Apple. Who knows?
Yeah.
But they would hardly sway the price of that index. So we tried to kind of level the playing field a little bit and include some interesting stuff and give them a voice.
Yeah, and I'm glad that you brought up this concept of being the next Apple, because I think that people get very complacent when the top, three or four stocks, like we're looking at here, Amazon, Apple, and Microsoft, the top three stocks right now in this economy in terms of their market capitalization, just size of the company. People get complacent when they've been the top for a couple of years and they think like, oh, those will just be the top forever. But you're absolutely right that these different stocks, they climb and they gain relevance. And if you're not looking out for them, and right here in this example here, Shopify, a company that is up over 100% this year, now has a market capitalization well over $100 billion, getting closer and closer to these big boys here that are in the trillions. But hey, like it could very well be the next Amazon, not even in the NASDAQ 100. And so we really made a point of getting stocks that we thought were relevant to technology and then giving them a chance to sway this index, like you're saying, because the top five market capitalization stocks, Michael, in 2025, 2030 and beyond are likely not going to be these same three stocks. It's like, just to go back to sports, because I know you love it so much, the NFL starting soon. Every year, everybody's like, oh, the Patriots, they're going to win. Hey, the Patriots, you're an East Coast guy.
I'm in New England. I've been so lucky to watch them win that many times.
But every year, everybody thinks the Patriots are going to win because they've won so many times, right? But, last year, they're not even in the Super Bowl. And
Yep.
It's the same idea here where if you just get complacent, like, oh, Apple's going to be the biggest company forever. And so who cares about Shopify or Wayfair or Moderna? The stuff cycles in and out, and we wanted that diversity, and we also wanted that equalization here to create a more, I guess, and I hope people don't take this any type of way, but democracy type technology index here.
Yeah, especially when you talk about the maturation of companies as well. I mean, no doubt it's impressive. Apple went from $1 trillion to $2 trillion in just like 2 years. That's unheard of. But just like the Patriots, and no offense to my New England homestead, but maybe you're reaching kind of the top of the business cycle or the maturation of the product. And you wouldn't want to miss out on a company's growth like Wayfair or Moderna or Shopify, which have really been kind of exciting trades over the past year here since January, greatly outperforming some of those big dogs. So
yeah, and it's not even a matter of just putting them in the index. Like NASDAQ and those guys could do that, but still probably end up giving them a very small weighting. So they could say to you and me, hey, we got the new fresh thing. but it doesn't really reflect anything. It doesn't really matter. These moves here have contributed a very large effect on the index. And this is the way that we wanted it, is the biggest mover contributes the biggest effect to the index. And we love to see it here that our STIX product is up a little over 30% on the year. If you're just looking at the index, I know it's only been trading for 4.5 days, the futures, but the index is up over 30%, similar to that NASDAQ. But instead of Apple contributing, 25% of that move, we have Wayfair contributing, what would that be here? I'm trying to crunch numbers on the fly. A sixth of that move, and Moderna a sixth of that move, and then Shopify, a tenth of it. This is it's nice to see that these smaller companies that, of course, could fizzle out. Shopify could fall by 100%, or not 100%. That's not theoretically possible, but fall by like 50% next year, and it might not be the next Amazon. But as we've talked about in the past, Michael, these things do shift. Back in the mid 2000s, Exxon was the company that was going up by 100% and 100% every year, and that has totally shifted now. So, not calling for the downfall of those big boys there in Apple, Amazon, and Microsoft, but these things do change, and we wanted to get ahead of that and give you an index that contributes the largest effects just relative to what's moving.
Agreed completely, especially when we look at earnings seasons in particular. I mean, you have all these companies releasing on a weekly basis or daily basis, and I think earnings are a pretty fun engagement tool. It's always nice to see what's happening, and I think it's an exciting play. When you look at some of these tech companies that are really jumping around on earnings, and then you compare it to a bigger index like the NASDAQ, you may only see a minuscule effect. When you have an index that's a little more representative and equally weighted, you actually see the swing, and those earning jumps, which are often big moves, do have an impact on the index.
And that's for trading purposes, for short-term trading opportunities, because if you are looking at the NASDAQ relative to the earnings cycle, you really only have to worry about 4 or 5 days in that cycle. Whereas this one, you're worried about all 60 of them. It presents a short-term trading effect, but then also, Michael, from the investment side, because these earnings cycles are these quarterly diagnostic checks for your investment. And if you use the STIX product as a long-term investment to buy technology stocks, and you see Shopify have a great earnings cycle, you want to see that reflected. And right now, that's just not the case with some of those older tech products. And you had this idea here, Michael, to kind of take a step back from the specific names and look at this idea that is novel in this product. We sectorized a sector, essentially. We took technology out of the stock market, made it bigger, and then chopped it into its own sectors here, looking at biotech, retail, media, information. It's a cool concept that honestly made our work easier for us in assigning the different stocks that would be in this index. And I think we did a pretty good job picking the sectors too, right?
I agree. And it's been fun to observe, actually. There is a pretty clear delineation between these 4 sectors. And on any given day, one of these sectors is driving or pulling down the index. And you can see it in kind of the single names. I think in general, if retail technology companies are doing well, all the other retail companies are doing well. And we've seen that on days where, for example, biotechnology is my sneaky favorite subsector of this index, because I probably wouldn't buy or sell single name biotechs directly because they do tend to swing around a lot, but clustering them together, especially we're in a pandemic, right? I mean, those companies are innovating on this front, and they're certainly swinging around. Abbott Labs in particular is one of those that we've seen outperform.
Well, and this Moderna appreciation is largely owing to them being one of the front runners for a vaccine. And yet Abbott Labs this week, as you've noted on Big Movers in the morning, that you've been doing a spectacular job at, moving a lot this week because of they have a new test. And so it is really cool because you look so often, Michael, at the S&P or the NASDAQ or the Dow, and you see, oh, technology is up, but S&Ps are being pulled lower by energy. It's the same thing here, right? You and I have been looking at this on a daily basis with that big mover segment, where we'll see some days where biotechnology is up and retail is the underperformer, or information, you got, NVIDIA and Microsoft and Apple are up, and those media companies like Twitter and Snapchat are tugging it lower, and breaking up into those sectors was made it easier for us to construct the index, and also makes it easier for the trader to kind of understand what's shifting it, right?
Exactly. And you look at any company now, you could potentially argue they're a technology company. I mean, if you're working from home, are you working for a technology company? I'm not sure completely, but you could maybe make an argument there. But digging a little bit deeper into what's actually comprising the tech industry, what are the cool new companies that are out there? And you look at them from the information, retail, media, and bio basis, and you learn so much more about what's actually contributing. And I think it's a fun way to construct an index.
Yeah, absolutely. We've had a ton of fun doing it. And yeah, one of the things on my mood board when we were looking at constructing this index was there was a story a couple of years ago that the Domino's pizza CEO was like, "We're a technology company." And it was like one of those headlines that it's like, all right, this guy's crazy. But you read about it, and out of, I would say, most of the pizza companies, public companies here in the US, I wouldn't classify as technology, but Domino's was like, we want to create a technology to cook the pizzas in the back of the delivery vans so that it's fresh for the people upon delivery. It's being cooked on its way to them, and it overhauls all. We don't need to have these stores throughout these cities to make the pizzas. We don't need necessarily people to make the pizzas themselves. And so that's how we viewed this, was looking at retail and media and biology here. Biotech is easier to classify, but retail and media specifically, it was just like, if they're actually, no matter how old or young the company is, if we feel like they're at the forefront of technology and they have a high correlation to other technology stocks, we're throwing them in there. And it was kind of this freeing process, because we created these 4 pillars ourselves, and then decided that EA Games, people who create video games here, do very well, is just as much a media company as Disney, and the same as Spotify, a stock that's only existed for less than a year here.
And probably a service that most of us use on a daily basis. I know you're probably an Apple Music guy. I'm definitely a Spotify user. Just, I don't know why it happened to be that way. But you recognize so many of these names. And this slide, I think, is really powerful. And this resource in particular, of course, you can see the index components just by going to the indexit.dxfeed website. But another point I want to highlight, which is new to the STIX and a little differentiator from the small stock 75, is that we actually include ADRs in this index as well. So we're not just limiting technological advancement to the United States. I mean, there's a lot of really cool stuff happening, especially in China, I think, with firms like Alibaba. And today, IQ is a huge outperformer on the day. It's up over 8.5%. And if you want, you can see the index components through the Tastyworks platform and their weights and what's moving. And it's a kind of nice way to basically take this chart and update it on a second by second basis. So
absolutely,
that's where you can check out what's driving the index as well.
Yeah, it's a very cool process there to look at what's moving the indices on a daily basis, especially in the STIX. And I wanted to break this out in the same way that we did with those single stocks, and look at what has shifted the STIX this year, given the fact that we gave approximately 25% to info stocks. So that's your semiconductors, that's your Apples, your Microsofts, your Adobes, and all of those type of companies. And then in retail, you've got your Amazons, your Shopifys, and all of that. In media, as Michael just highlighted a few of those, and then biotech, kind of self-explanatory. And this is what we love to see here, is that with those equal weightings contributing these different amounts, obviously here in 2020, given the circumstances of this pandemic, these technological retailers have been outperforming everyone. I mean, any subsector here in tech and any other other sector outside of technology, these companies have been doing the best, but they have the same weighting here because we don't know what's going to happen the second half of this year, next year, or the year to follow. It might be these media companies taking over, or biotechnology being the big mover. And same thing with the downside. This is something that I love for both bulls and bears, both short-term traders and long-term investors on either side of the market, is giving these near equal weightings, because you can have your views on technology or where stocks are going, but if it's biotech stocks that bring this all down, or it's these media companies that are in a little bit of a bubble, you don't want to miss out on that exposure, given the fact that the top 3 or 4 names in NASDAQ are not media or biotech. And so for both sides of the market, for whatever your time frame is, we like this near equal weighting that gives whatever effect that is specific to those sectors here.